are the customers. The market maker is just going to continue upping the price. If the only people that are out there selling are people other than the market maker is going to move price down. So you can see here that sellers outside of the market maker came into the market and started soaking up these buyers' orders. So the market goes sideways. 1 hour, 2 hour. Here's a probe to the downside. You can see that the sellers tried to push it down, and they didn't really get anywhere. But then the buyers really didn't get anywhere either. So 3 hours, 4 hours go by without a whole lot going on. Now, you can see that, well, let me point it out to you. You can see that all of this is happening outside of the normal hours. So the thinking process at this point is, well, the market may be coming up to resistance, but, this is 5 o'clock in the afternoon Eastern Standard Time. We're getting into the Asian session. Maybe I should probably just skip it. In fact, most of the major New York traders are going home by this time. They're closing out their books. So you may get a reaction, you may not. I prefer to skip this particular trading hour trying to look for patterns. So again, here's the thinking process. We have resistance. We can see that momentum is slowing down, but are there going to be enough traders left to carry this position into profit for me? And the likely answer is probably not. The market may move down a little bit, but you're probably not going to see a really big move or a big enough move to make money. Now, this position I think may have wound up working out, but the moral of the story is you can't always count on that happening. So now let's look at the market progresses. We've got 7, 8, 9 o'clock. You can see the market coming down to support. Here's 11 o'clock, midnight. You can see that the market just sort of falls into a trading range right into support. Here's coming into 2 o'clock in the morning. Now we're coming in. Here's 3 o'clock in the morning. Okay, so the close of this bar happens at 3 o'clock. You can see what happens. What is the market doing? It's trading down towards support again. Why do I say that? Well, you can see these lows over here were forming support. Why are they forming support? Because if there were more sellers out there, the market would have continued going down. You can also see that the market turned in a very wide range over here as well, indicating that there was support down here. How do we know? Because the market turned around and started going to the upside. So we're back into the sweet spot. You can see that the market has started moving back up. You can see that as we look back to the left, we can see that the market is dealing with this resistance level here, and it's coming up off of support here, moving in this direction. Now, if the momentum is going to continue here, what will you see? Well, you'll see that the market will start gaining momentum on the downside, just like it did over here, and just like it did over here. Well, if that doesn't happen, if you see that the market just can't get momentum going to the downside, the likely direction then is opposite. When you're talking about liquid markets during active trading times, it's very rare that they just stagnate and go nowhere. So as we see this market coming into this support area, it's holding this 9670 level. It's holding these prior lows, you can see. As we see it moving into this support area, now is when we can start looking for the market to make its move. Now, one method, of course, is looking at the market as it approaches this support area down here. This is where you would want to go into the 15-minute bar and start looking for the 3-bar reversal. So let's bring up this 15-minute bar here. We've got to move back in time. Let me line it up. So you can see in this area, whoops, no you can't. Sorry. This area here represents the low on this bar. Okay, so you can see that the market is trading down towards the prior support line.